All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Ball. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and leader of T3 Labs Pro Desk virtual trading floor. Before we get into any market discussions here, let's just take a quick look at Derrick's current positions as of our recording time here. That's what Derrick is currently long and short in this market. Again, he is the head trader at T3 Trading Group, which is part of our disclosures here. Happy Monday, Derrick. How is your trading day going so far?
It's going pretty well. Market's getting real crazy just with some of these high flying like pre-revenue companies that are just having two to 15 days up in a row, just like straight vertically higher. So it's breeding a lot of opportunity, I think, in both directions of this market, especially for shorter term day traders and swing traders, just off the immense volatility on some of those names, while the market continues to continue its never ending upside grind. So pretty good day for me so far. Just, really nabbed the opening drive lower in QS on some big size this morning. So certainly helped. So far so good.
You mentioned it's a never-ending grind. Out of this bull market feels unstoppable at this point. But like you said, lots of these, pre-revenue names. The description a lot of traders use when we get to like this point in the market is we're feeling kind of frothy. We're getting really extended to the upside. We're seeing those kind of crazy moves in those pre-revenue names that they don't have earnings to back up what those moves and those valuations are. Do you have to be careful at this point in the market, or no?
Yeah, I think so for sure. The market definitely feels a little bit frothy to me here. But it continues to reward anybody that chases price in basically anything. So no one is feeling any pain. No one's feeling any pain literally anywhere. So while the market, when I start seeing, some of the names I'm short right now, JOBY, QS, give the moves that they've been giving, or today, Open Door Technologies up 73% as we're having this conversation on the day, and that was after it went up like 150% in 4 days or something like that last week. Like, some of these moves just start to get a little bit crazy, and I have very consistently noticed that means that you're towards the end of the cycle than the beginning, but the timing of that is always still very difficult. Sometimes when you start seeing these types of stocks go crazy, you're a couple days away, sometimes you're a couple weeks away, sometimes you're a couple months away. So the big thing that I'm paying attention to is just still like where we're at from a systematic positioning perspective for the market. Like when will it become possible for people to start getting hurt? And I think that we're starting to enter a period of time here where seeing a bigger pullback on the market becomes more reasonable. We had OPEX on Friday. August and especially September tend to have some degree of seasonal weakness, and this is also a market of records. We had records very consistently in April on the downside. It was just like one thing after the next, and now we're seeing these records on the upside. Like this morning, I had read in my partner Pat's note that the NASDAQ 100 has now gone 60 trading days without closing below its 20 daily moving average. That's the second longest streak in history since that's been recorded, like going back to 1985. And the only other time that it's ever been longer was in 1999, right? So we all know what happened in 1999. I'm not saying that this is that, though. Some people are arguing for that. Someone sent me a note from, I think, Torsten Slok over the weekend, who is an analyst that I like, generally speaking, who was comparing where we are in the AI cycle to the tech bubble, like the .com tech bubble. That's not an analogy that I've agreed with really at any point on the way up, and I still don't really agree with it here. But I thought it was notable because it's a pretty smart analyst there. And at the same time as that, Like I can't look at Nvidia and say that the chart looks bad. I can't look at Nvidia and say that it's too expensive fundamentally. I really don't think it's too expensive fundamentally. I can't look at Nvidia and say it's a bad company. I can't really look at Nvidia and say anything bad about it at all. But what I can do is I can look at Nvidia and I can look at a statistic that shows that semiconductors. So one statistic I saw was that semiconductors from their COVID bottom to like their immediate peak was a 49% up move, which was the biggest that style move for semiconductor industry in history. And then this move since the April low has been 69% so far. And I think that data is probably over a week old now, so it's probably even higher than that. So I can look at, another world record in the semiconductor space and say, I don't hate NVIDIA, but when the thing has gone from $85 to $100 and almost $80 in a vertical line, and I'm reading a note from Goldman Sachs, it says that long positioning in it is a 10 out of 10. You start to wonder, maybe we're beginning to get close with some of this stuff, but you need pain to be felt somewhere, I think, for pain to bleed into other places, right? It might be a not great way to describe how trends work. So trends work in feedback cycles. Buying leads to more buying. Eventually, trends can lead to a feedback cycle of selling. It's a downtrend where selling leads to more selling. But you need something to trigger that. And where we're at right now, there is an increasing risk to the downside if you can trigger the market lower, but there is still a lot of buying that's on the sidelines that can still come in, I think, over the course of the next month, probably through mid-August. And the fact of the matter is that while the trend is still fully intact, what you should be assuming is that buying is going to continue until that trend itself actually breaks. And that becomes the bottom line, which once again is just technical analysis. The trend is your friend. It's a saying as old as time in trading, and it's a saying that's as true as ever right now. This uptrend is intact. I see things that I'm concerned about. I do not like the idea of, like, for me personally, and more of like my longer term investing account, of buying more stock right here, right now. I personally, especially while you can still get a good return on your cash, I'm taking the extra money that I make and trying to put it into cash where I can still get a higher interest rate for the moment, and then wait for the bigger pullback to dip my toe in more from an investing perspective. But from a trading perspective, you could be trying to short that open when it had some upside capitulation, when it was up 100% today into like that 440 area. Or you could be buying the breakout in some of this stuff and making money in both directions from a trading perspective. So there's just a lot of opportunity out there right now, but it really feels to me like we're getting much closer to the end than the beginning right now, and I'm preparing myself for a much larger market pullback.
All right. A period of time for the market that tends to have some opportunities, whether it be downside or to the upside, is earnings. We are at the beginning of a pretty big earnings week for the market. Title of our stream today is that it's Tesla earnings week. So we'll talk about Tesla and other names that are reporting this week. Looking at your positions disclosure, you are short Tesla. Tesla reports earnings after the market closed on Wednesday. So does Alphabet, Google that day. And then we'll get Intel, IBM, other names this week. ServiceNow. I think those are kind of the highlights. But Tesla being definitely in focus for the market after everything that has happened with the stock over the past month? Has it been a month? Maybe only a month? I don't know. 2 months? Since Trump became president, really, I guess. Since November, everything that's happened.
It's been like a solid month and a half since the Trump Elon blow up.
The fight, yes.
The most notable recent thing.
Oh, it feels just so long ago already. Wow. Okay, so Tesla reports earnings Wednesday after the market closed. You are short currently. Will you remain short into the report? And how are you feeling about this earnings report? What's the focus for you as a trader? And what do you think the market overall is looking for out of these numbers?
So whether I keep it into earnings or not, I'm not certain yet. I probably will. The question is if I'm going to maintain my current size or reduce size. And again, just not 100% sure yet. Just still have a couple of days, and I want to see what it looks like as we're going into the report that day. Tesla looks significantly better above 320. It was holding 320 as resistance.
Do you want to screen share and look at a chart?
You can pull that up. It was holding 320 as support last month. Then it broke it, and it's been holding it as resistance basically ever since. So you can see that here on the daily chart. And then it broke out of that resistance kind of a couple trading sessions ago. Really, I guess, confirmed that break on Friday. So to me, this chart, which is really, it's really building a big wedge here. It's building like a really big triangle. You could actually draw that triangle out probably to the high back here in December 2024, which I think is the all-time high, and then the low of April, and you can just really see this wedge tightening and tightening and tightening. And then interestingly enough, it's potentially putting in a pivot high today into the upper band of that triangle. So we'll see which way that breaks, and I want to see where it's trading into the report. I would say generally speaking, this thing looks better above 320, but you've got this big picture wedge that will probably decide how it trades going forward. The other interesting thing will be not just what the earnings report is, but the reaction to the report. Like if you remember the last time they reported, I had to turn bullish on this thing because I think it was back here in March. It came out with a report that missed expectations across the board, and they traded it higher. And I think, as you know, one of my favorite general trading signals is when bad news comes out and the stock moves higher, or good news comes out and the stock moves lower. Sorry, I said that wrong because I was trading Joby at the same time. Let me try that one again. One of my favorite signals is that when good news comes out and the stock can't go higher, a lot of times it's a signal for the other way. When bad news comes out and the stock can't go down, or in the case of Tesla on their last earnings report, even moves up, a lot of times that's a signal that the stock is done selling. So can Tesla repeat that? Can it put up another, mediocre earnings report and still, even with that, trade up? We'll see. It's at a much higher price than it was on that last report, and we'll see just how good or how bad the earnings report is. But I don't see how Tesla could have a good report, to be honest. I mean, I don't know exactly what's priced into the expectations at this point, but I don't know where the 180 PE multiple is still coming from in this stock. I mean, I was talking about NVIDIA just a second ago that I think is a great company. I mean, this is the company that is literally the one that is revolutionizing the world, right? Doesn't matter who the AI winner is. Maybe the AI winner is Tesla, and I'm completely wrong on that. But it doesn't matter who the AI winners are going to be. NVIDIA is going to be involved with them. It's pretty much a guarantee. Whereas Tesla, I don't see them winning in literally anything right now. But we'll see how the report goes.
All right, Tesla's not the only big tech name reporting this week. We're getting Alphabet, Google, and like I mentioned, so Alphabet and Google, or not Alphabet and Google and Tesla are both after the market close on Wednesday. So ServiceNow as well. Thursday, Intel, so that'll be your first chip maker reporting. So it's a good look at that space. Intel's not, not NVIDIA, but NVIDIA reports so late. So it's like, I feel like earnings ahead of it, all the chip makers ahead of NVIDIA, people, the market can trade them on what can be the read through to NVIDIA, and NVIDIA gets a lot of sympathy.
So Google is funny because
I was gonna say, what is your Google focus?
It's the stock in the Mag 7 that's like the literal opposite of Tesla. Tesla's the most expensive one by far and away. Google is the cheapest one by far. And to some degree for good reason, right? There's a lot of chatter that obviously their core business forever, even though at this point they've got a lot of businesses, they're going pretty well for them from cloud to YouTube, but their core business forever has been search. And I don't know about you, Greta, but I can tell you for myself personally, I'm finding that the more time goes by, the more I'm using AI. I personally have Perplexity as my go-to, instead of doing a basic just Google search. It's just becoming a higher and higher percentage of the time I'm just checking it out on AI instead of trying to find a Google link and figuring it all out and just not getting the answers I want immediately. At the same time as that, Google is really cheap, and the chart I think looks fantastic. Google just had a big breakout through 180. That was a really important level. Then it made like a bullish consolidation or bull flag above that 180, and now Friday through today, it's giving another leg up of continuation off of that. So this is the cheapest one out there. It's got a fantastic looking chart. We'll see what the numbers look like. I think they're set up for success.
This earnings season overall, you and I talked about it briefly last week, but comes at a time when the market, like we talked about, is frothy and just never ending higher every single day. Do you think that sets up the market as a whole for a tough earnings season when it comes to reactions moving higher off of these reports?
Sure. So that's a great question. This is a unique earnings season, I think, that we're coming into. So something I've seen very consistently over the course of my career is that when the market is up a lot into earnings season, companies will struggle to continue on their earnings report because a lot of it is priced in. Very generally speaking, you're still going to have some that crush it and go up a ton, some that are terrible and go down a lot, some that are bad and go up, some that are good and go down. You'll still see like everything under the sun come together. But as a general rule, when the market is performing really well into an earnings season, companies struggle to continue compared to the opposite. If the market is trading really down into an earnings season, it becomes a lot easier, I think, for stocks to move up in their earnings report. With that said, growth is priced in, I think, much less for this earnings season than it has been for previous ones. So I think that what that's going to translate to, the thing that I have the most amount of conviction on. So one other stat that I'll point out is the implied volatility from the options market right now has like the average earnings season move, I think, at a lower point than it's been at any time in the last 25 years or something like that. So generally speaking, it's interesting. The market is not expecting huge moves from earnings companies this season. Where I think that companies are going to get really punished this time around, more so than usual, though, is going to be on big misses. If the market's up a lot, but yet the market is not actually pricing in huge growth from earnings reports in this earnings season, if you miss badly and your stock's up a lot on it and they weren't expecting a lot from you to begin with, you might get absolutely and utterly obliterated. So circling back on the entire thought process, I would say on average, the risk is probably to the downside here for most companies as they report. The most notable one I think that we've had so far this earnings season, and it brings up one other important theme as we come into this earnings season, the most notable one that we've had so far has been Netflix. Netflix reported, I think, Thursday after the close last week, and the report was good. They pretty much beat on everything and they guided higher. But, and here comes that other important theme, the guide higher was primarily due to the weaker dollar. So the stock, even though the report was good, has been up a ton. This is the last time it reported earnings. And they sold it down. They sold it down through 1240 support. That was actually a trade that I called out to the team in the VTF that morning. You could potentially look to short Netflix through 1240. Trading Netflix, in my opinion, is never easy because the stock is so expensive now and the spreads are so wide. To take that trade properly would have required like $6 worth of risk, which is actually nothing for Netflix. But it's $6 worth of risk is still a lot for anybody that's a smaller trader. And it worked for $40 very, very quickly and very, very easily. But it's about the dollar. So their beat on their guidance was specifically due to the fact that the dollar weakened out. So I've got kind of one other experience with this, and that was back in 2012. In 2012, and the UUP ETF here, this is the ETF I like to look at just to give me a quick look at how the dollar is moving. Probably not the best product to be looking at, but I can get a quick look at things, and it's just from an ETF. But they did do a big split or reverse split. It was right here at a certain point. So you can't really just compare the chart in 2025 comparing the chart in 2022. But what you can notice is look at the move in the dollar in 2022. This thing skyrocketed from a low of like $24 in, I don't know, May or so of 2021. And then by 2022, it was trading at 25.50. And then in a 10-month period of time, this is a huge move for how the dollar works, going from 25.50 up to 30.50. That's a huge move for the dollar. And in that earnings season, I think it was the July 2022 earnings season, there was a very common theme, and it impacted a lot of, you have to remember, in the S&P 500, many of those companies now are multinational companies. Like pretty much all the Mag 7, they're multinational companies, right? You can just use, I don't know, Tesla as an example, because we were just talking about that. They sell cars in the United States. They attempt to sell cars in Europe. They sell cars in China. They're starting to sell cars in India. They're starting to sell cars in Saudi Arabia. All the Mag 7 companies and the vast majority of the companies in the S&P, these are international companies that are based in the United States. So the currency movements have a large impact. Anyway, back in 2022, that July 2022 earnings season, a lot of companies were missing on their earnings reports and missing on their guidance, specifically because the dollar was up so much. And the market was, and this was where my learning process came in, the market was extremely forgiving of that. The market tends to say like, okay, if you miss or beat on earnings because currency movement, we don't really care too much because currencies in the long run, they tend to be mean reverting. This is not the end of the world. Now coming into this earnings season, we are in the opposite scenario. The dollar has been getting absolutely and utterly destroyed in 2025. I think that this is the second worst start for a calendar year for the US dollar since 1950. It's been getting absolutely destroyed. So then you see Netflix report earnings and have this great initial headline beat on their guidance, and you look and you go, oh man, that number looks great. And then when you read in the fine print, you say, oh yeah, but it's primarily because the dollar weakened out. It's almost the opposite of what happened in 2022, where companies were missing and getting a pass. Here, you had a company that reported a great earnings report and they sold it down anyway. So that might be a big theme that we see this earnings season as well. We might see a lot of companies that are multinational put up pretty good guidance and pretty good numbers, but then say, hey, we're attributing a lot of this to the weakness in the dollar, and the market doesn't treat them as kindly as a result.
Really good stuff. Not things I would have thought of, the dollar and earnings. So I hope that intrigued everyone else as much as it did me, because that was really good, Derrick. All right. When it comes to this market, this frothy, unstoppable bull market, what do you like here? What are you looking at when it comes to the charts?
So, the market technicals here just look up and away. And, one of the guys on the team asked a great question this morning, kind of asked and answered a great question this morning about like, well, where do we still think that the max pain is for most market participants? And he thinks, and I tend to agree with, that the max pain is still to the upside. And you look at the SPY technicals here that look super bullish, and you have to understand that there is still a really strong systematic bid underneath the market coming from vol control funds and coming from CTA trend following algorithms that are just going to be continuing to buy very heavily this week, it sounds like, and probably through at least mid-August at this point. There's a lot of things that are very supportive here. At the same time, we already discussed sentiment, and you can see that sentiment in the JOBYs of the world, in the QSs of the world, in the open, like these names that are running. You saw Space start to go last week. Like when they start to really run these names, and when sentiment gets so high, that's also a warning sign as well. I don't think that sentiment's ever like a perfect timing mechanism. It's also just something to pay attention to. So kind of where I'm at right now is I don't like any new real big picture longs here, but I'm respecting the fact that these technicals in the S&P and the NASDAQ look phenomenally well. So I think that you can still be buying shorter term day trade, short-term swing trade longs and things that are breaking out, whether that's the SPYs, the Qs, or maybe you don't want to do it right in front of an earnings report, but like that Google breakout that we just mentioned. You can continue to buy some of those things as long as you're not too greedy, as long as you're willing to stop yourself out when they fail or when they pull back. At the same time, there's a lot of short-term money to be made right now, I think, in these QSs of the world. This QS is my best name on the day. I traded between QS and JOBY. I have traded an insane amount of volume in these two names today. And that's shorter term money. And that doesn't really matter so much what the market's doing when it comes to these stocks. It's entirely like, when is the squeeze going to end? When is the chair game? When's the last person going to miss out on the last chair kind of situation? And, you eventually get a technical pullback on those, or in other circumstances, finding these before they break and capturing the breakout. Like that's just shorter term money that you can be making on each side of the market when you're in this frothy period, if you feel a little bit uncertain about the bigger picture, which is where I'm at. I do not like this market. There's so many things I hate about it right now, but what I like the most about it is the technicals, and that's the most important thing. So until the technicals change, you got to be very careful just trying to hammer the short side to the big picture. But I feel like that's coming here at some point between now and the end of September, that we're going to get like a really big technical pullback. But trying to say right here, right now, while I'm talking to you, Greta, and the SPY is printing an all-time high, that's going to happen as soon as we get off the call today, you can't do that. You need to wait for the technical signal to present itself. So, that's where we're at. I like the idea of focusing on the BS money, for lack of a better term. There's so many of those names that are out there right now. I'll let the listeners do their own research on them, but it's just one stock after the next that's just having a squeeze. You can trade them long. You can trade them short when they go too much. Make sure you're managing your risk, but there's a lot of opportunity to make money in names when they're moving 5 to 50% a day.
Yeah, open up 85% right now.
Right.
Crazy. I've never heard trading compared to a game of musical chairs.
That's musical chairs. That's what I was looking for.
Yeah. All right. Derrick is a real trader, so I'm going to let him get back to that. Again, he is the head trader at T3 Trading Group. If you'd like to learn more about prop trading, the benefits, and how you could work with Derrick yourself, you can get his free ebook at t3live.com/DO-live. Again, it's about prop trading, the benefits of prop trading. And if you're a prop trader with T3 Trading Group, you do work directly with Derrick every single day. He's your leader there in the Pro Desk virtual trading floor. Him and Pat make a great team. Lots of good stuff. All right. One quick question here right at the end. I was hoping to get something. Cody asked, hey, Derrick, from a portfolio perspective, do you recommend September VIX calls to hedge?
Yeah, September, August. I got some August stuff on. I have an August call spread on, and I've got some outright August VIX calls as well. So I like that for that period of time. And we have been seeing, I think, a lot of institutional order flow of smart money that's been doing that as well. So, if you're nervous about the market, but you're maintaining your longs because the trend is your friend and the trend is higher, but you're concerned that at any moment we could hit that point where we begin to break the upward trend and upward feedback cycle. I mean, there's a lot of potential catalysts coming up. In less than 2 weeks, we have our August 1st trade deadline, and it seems like the market is 100% pricing in that Trump is going to taco on it, and I actually don't think he's going to. I think that if deals aren't done, he's gonna increase at that point. Maybe that's your signal. Maybe your signal is that breaks this market is the jobs number that we get in the beginning of August. I just read a really important research note I thought this morning about how we are now finally really beginning to see the tip of the iceberg on tariff-related inflation. It was highlighting some data from Walmart that Walmart just very recently now has finally started to increase their prices, but on some of their goods, it's as much as 50%. One of the traders in the VTF this morning gave us some anecdotal feedback and evidence that his business, which is a retail business that he runs, all of a sudden he's really beginning to see from his suppliers the impact of these tariffs. So we could be on the precipice of that right as we're going into this August 1st. You have a whole ton of potential catalysts, because I think that's what you need, right? The market's in this feedback cycle to the upside. That could last for another month here. The systematic bid is still intact. The only way that that changes is if a real catalyst can actually break this market down. And that has not been able to occur, but there's a bunch on the horizon that I think could potentially do it. And therefore, if you want to maintain some longs, but you also want to, because the trend is your friend, but you also want to hedge those because you recognize these risks, then, you know, having an S&P put spread on, or having a VIX call spread on for August, September, those would be the dates that I'd be looking at. I think makes a ton of sense here. Great question.
All right. Now I'll let you go,
right.
Derrick. Again, tplive.com/DOLive for Derrick's free ebook. That was a great question to end on there. So thank you, Cody. Okay, Joe wants to know, or what's your all-time favorite Rush song?
Oh man, my all-time favorite one. I mean, 2112 is just kind of has to be it, you know. There's some deep cuts that probably make their way up also, like maybe not that deep, but like The Pass and Dreamline are phenomenal songs. But I mean, 2112, those first two parts in particular are just like some of the greatest rock and roll of all time right there. Best musicians of all time. Great question.
All right. That was a good one to end on. All right. tplive.com/DOLive for Derrick's free ebook. Derrick, have a great Monday. Good rest of your trading week. Got some big earnings coming up, so I hope you can get some good trades off those. And I'll talk next week.
Thanks, Retta. Have a good one.